Hello traders, welcome back to Nova channel. In less than 24 hours, gold has made a stunning comeback, rallying from a sharp low of $32.44 during yesterday's Asian session to over $33.38 today. That's nearly a $90 bounce, fast and unexpected. But the real question is, why did gold reverse so strongly? And more importantly, is this just a technical correction or beginning of a new bullish trend? The answer lies in the latest U.S. inflation data, core PCE, released last Friday. The number rose by just 0.1% month-over-month and 2.6% year-over-year. But more importantly, there's no signs of reacceleration. Inflation continues to cool, slowly but steadily. For a market that's been waiting forever to hear the Fed says we're ready to cut, this was the green light. Even before the Fed made any move, the market made its own. The US dollar index dropped, bond yields fell, and gold exploded upward. Right now, futures are pricing in 63 basic points of rate cuts by year-end, with growing bets that the first cut could come as early as September. As the loss thickens today, Fed Chair Jerome Powell is scheduled to speak. So here's the setup. The data says it's time to ease, but the Fed keeps saying not yet. Which one will Powell lean into today? If he even slightly acknowledges that inflation is cooling, it could give gold the green light to run higher. But if he doubles down on higher for longer narrative, this entire rebound could fade just as fast. Now, let's take a quick look at the chart. On the 1-hour time frame, gold has broken above the EMA 34.89 zone, shifting short-term structure from bearish to bullish. The $33.05 level, previously strong resistance, is now acting as support. Price is currently testing the $33.38 to $33.40 liquidity zone. If this breaks cleanly, we could see price reach $33.60 or even $33.75 in the coming sessions. But again, Powell's speech is the wild card. Volatility will spike. So this is not the time to gamble, it's the time to wait for confirmation. If you're bullish, wait for the price to hold above $33.20 or look for a pullback to the $33.05 to $33.10 zone to get better risk-reward ratio. Or if you're bearish, you can watch for signs of rejection around $33.40, especially if Powell comes in hawkish. But remember, keep your stop loss tight. Gold is unforgiving in the moments like this. So here's the bottom line. This rebound wasn't just about the price. It was about narrative. The market is betting that the Fed will soon be forced to shift in tone. And if Powell signals that today, we could be looking at the start of the bigger bullish move in gold for the third quarter. But if you don't want to face this market swing alone, if you want a solid, well-reasonable gold trading plan that blends both technical precision and macro insights, then join our community on Telegram, Nova Scalper. Here you will get real-time setups, smart stop loss, taking profit zones, and a team of serious strategy-driven traders who don't FOMO. Trade with logic, trade with clarity, and most of all, don't trade alone. Happy trading! See you in the next video.